So guys, the new month is officially upon us, which means that it's time for another dividend portfolio update. And I don't know what the heck is going on, but my portfolio is sitting at yet another all-time high. I almost can't believe it. Anyway, in this video, guys, I'm going to show you everything, like my best and worst performing stocks for the month, all of my recent moves in the portfolio, and we'll discuss what my upcoming plans are here in March. But before we get to that, guys, I want to hear from you. Leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any crazy milestones in your portfolio? Anything cool that happened to you guys this last month? I want to hear all about it in the comments below. Anyway, guys, getting into how my portfolio performed this last month and just starting here with my taxable brokerage account. Here we can see it is currently valued at $79,132. And on the dividend side of things, my projected annual income in this account is $2,774, which breaks down to about $231 every single month or $7.60 every single day without having to lift a finger. That is like a double-double from in and out every single day. But going back to the account's current value for just a second, that $79,000 figure is up like $3,000 compared to this time last month, which is just unreal. 2025 so far has just been nothing but great for the portfolio. It's almost been a little bit too good. I should actually probably knock on wood here. And by the way, guys, the platform that we were looking at just a moment ago was Snowball Analytics, which is actually the sponsor of today's video. This is a really cool portfolio tracker that I think you guys would like a lot. They're actually running a really big sale right now, and I want to tell you a little bit more about it. One of the most essential tools for any investor is a solid portfolio tracker, and Snowball Analytics is like the Swiss Army knife of portfolio trackers. I've been using this platform pretty religiously to track my own portfolio for a while now, and I'm extremely impressed by just how much insight it provides into my portfolio. As you can see, the layout is very clean and intuitive, and I found the platform pretty easy to navigate. Plus, it's packed with more charts and graphs than you can count, which speaks to just how much insight it offers not only into your portfolio, but also at the individual stock level as well. I mean, pretty much anything you want to know about a company's financials or dividend history can be found here within the platform. Now, in my opinion, what really sets Snowball Analytics apart are the features that it has specifically designed for dividend investors. I'm actually convinced this platform was made for us, and here are a few of my favorite features. First off, Snowball tells you your total returns by default throughout the platform, which may sound like a small thing, but it's crucial for dividend investors because it doesn't neglect the dividend income we receive when calculating returns. Most other portfolio trackers will only show share price returns, which is really only half the equation, so it's refreshing to see dividends calculated into these calculations. Additionally, Snowball also has a pretty robust event calendar that keeps you updated with upcoming news, events, and dividend payments. They even have a dedicated dividend calendar so you can see who's paying each month, when they're paying, and how much they're paying. And then another favorite feature of mine is Snowball's backtest tool, which lets you see how your portfolio stacks up against the S&P or any other benchmark across multiple time periods. And once again, dividends are included in the calculations, which is awesome. And beyond these tools, Snowball also offers a community feature where you can check out other users' public portfolios to see what others are investing in, which is always a fun thing to look at. Plus, they have stats for stocks and ETFs that show what's trending and popular among other investors. This makes Snowball not just a killer portfolio tracker, but also a great place for dividend investors to get new investing ideas. So overall, if you're looking for a great portfolio tracker, which once again is something that every investor needs, then I highly recommend you check out Snowball Analytics, which you can actually do for free. All you need to do is click the link in the description of the video or in the pinned comment, or just scan this QR code right here to get a 14-day free trial. And if you like it, right now you can save 30% on your subscription with their spring sale. I've personally really enjoyed using Snowball Analytics, and I know you will too, so definitely take advantage of that spring sale and save 30% on your subscription. But anyway, guys, getting back to it and taking a look at the breakdown of returns back over here on Snowball, my taxable account in the month of February was up 3.4%, which was a very, very solid month. It's not as nice as what we saw in January, where I was up about 5.6%, but still, I will take that 3.4% return. It's certainly better than nothing. And dissecting this just a little bit more, here we can see that about $2,300 of these gains in the last month came from share price appreciation, so that's very solid, some nice appreciation there. Then I also received about $230 in dividends in the month of February. And in case you missed my previous video where I broke down all of my dividend payments for the month, this is what we're rocking with, guys. I had a couple pretty hefty payments come in February, the largest of which was from EPD, who paid me over $60 for for the month. That was very solid. And I also got another very nice payment from none other than Starbucks at the end of February. Starbucks paid me almost $50 for the month. And then I had a few other payments here in the high teens, in the low to mid 20s. So overall, it was a very solid month. In total, like I said a moment ago, $234, which is about on average for this account. But anyway, guys, now switching gears and comparing my taxable accounts returns to those of the S&P 500, the NASDAQ, and SCHD. In the last month, I outperformed everybody, guys. Like we saw a moment ago, I was up 3.4%, and it looks like both the S&P 500 and the NASDAQ were in the red this last month, and then I outperformed SCHD by, looks like 0.8%. And then if we look at the returns on a year-to-date basis, things are looking hot, guys. So far in 2025, I'm up over 9%, so things are looking really good there, and I'm still outperforming everything else. The S&P is up 1.7%, the NASDAQ is actually in the red by 0.6%, and then SCHD is up almost 4.5%, so that's actually doing better than these two as well, but still, I'm outperforming SCHD by like 4.5% or so. And then zooming out once more, guys, over the last 365 days, this is where things are shaking up. My portfolio is up about 25.5%, so some crazy returns in this last year, with the S&P up 16%, the NASDAQ up 13.7%, and SCHD coming in last at 12.25%. So my portfolio is absolutely dominating in the last year. I have no idea how that's happening. But nonetheless, guys, things are looking really good. February turned out to be another very killer month. And as I'm sure you can imagine, I had quite a few stocks see some pretty tremendous gains in the last month. And that's what we're going to be taking a look at next. Now, getting into my best and worst performing stocks for the month, believe it or not, guys, my best performing stock for the month was WP Carey, and I don't know if that has ever been the case before. This is quite the unicorn, but nonetheless, WP Carey is up 16.6% just in the last 30 days, which is going to leave the stock up just over 17% year to date. And this stock's upward trajectory started after the company reported their quarterly earnings, where they beat on revenue, and overall, it seems like the market is happy with the direction WP Carey is heading in, and that's being reflected in the share price. Now, back over here on Snowball, as far as my position goes, WP Carey is one of the smallest positions in my portfolio. It only makes up like 3% of the account. And with the substantial gains the stock saw in the last month, I am so close to getting back to break even just in terms of share price. I'm still down 1.5%, but those dividends push me back in the green, and I'm up almost 10% on a total return basis. But anyway, moving on, the second best performing stock in my portfolio this last month was AbbVie, who also was up double digits, up 11.5% in the last month, and this is going to leave AbbVie up almost 10% here in 2025. And like with WP Carey, AbbVie's big jump came after reporting earnings, where even though Humira sales continued to slump, both Skyrizi and Rinvoq are more than making up for those losses, with their sales seeing growth of 58% and 46% respectively year over year. And like with WP Carey, AbbVie is one of my smaller positions. It's just a little bit smaller than what I have with WP Carey, but still, this is one of the best performing positions in my portfolio. It's actually my second best performer. I'm up 97.5% on a total return basis, and I've said it before, I'll say it again, my only regret with AbbVie is that I don't own more of it because it's just done so well for me. And then in addition to WP Carey and AbbVie, I had quite a few other stocks see some pretty nice returns. I mean, J&J was up almost 9% for the month, VICI Properties was up 8.2%, Starbucks saw a nice 7.6% gain, we had a few stocks see gains greater than 5%, and then a handful more here in the green as well. So overall, much more green than red. But with that, there was still a little bit of red in the portfolio, and in terms of poor performing stocks, really the only one that saw any notable decline was Williams-Sonoma, who was down 7.3% just in the last month. But still, if we zoom out on a year-to-date basis, Williams-Sonoma is in the green, still up 1.25%. And Williams-Sonoma had a pretty meteoric rise these last couple of months. Like since December, it really jumped up in share price. So I think it was bound to see a little bit of a pullback. And my personal position's still up about 200%. So there's really nothing to worry about. All right, guys, now getting into all of my buys for the month, there were a few individual stocks that I picked up in February, the first of which was Johnson & Johnson. I didn't add too much to J&J because, as we saw a moment ago, it saw a pretty big jump, but I was able to pick up 0.8 of a share at an average cost of $151, which is quite a bit below the current share price, so I'm happy about that. But then the next stock that I added to, and I actually bought a lot of this one, was VICI Properties. And I bought it a little bit higher than I would have liked to, with an average cost of $31.80, but it's not the end of the world. The current share price is still a bit above where I bought it, so that's good. I made a little bit of money on those shares, and my average cost per share is still looking pretty good. I have 145 shares, average cost of $28.54, and with the nice gain that we saw from Vici this last month, I'm up 16% on a total return basis. And then last but certainly not least, I started adding to Clear Secure again, guys. I picked up 2 shares at the end of the month at an average cost of $22.81, and I'm thinking for the time being, I might start adding a bit more to Clear Secure again. I don't know exactly how much more I'll buy. Right now I have 106 shares of the company. I might get that up to maybe 120 or 130 shares and then hit the pause button again. Kind of depends what the share price does, but there's not really too much else in my portfolio that I'm interested in buying right now, so I figure I can average down on Clear Secure. I might as well. The company seems to be firing on all cylinders. That's at least the reading that I'm getting from their most recent quarterly earnings report, so I'm happy to buy more at this lower price. Anyway, those were the 3 individual companies I added to. Then I also made my regular buys of SCHD and VU. I really loaded the boat on SCHD in February, picking up a total of about 14 shares and an average cost of $27.60. And with VOO or VU, I only picked up a quarter of a share at an average cost of $553.03. So overall, I'd say it was a pretty straightforward month of buying. And here in March, guys, like I said a moment ago, the only stock that's really sticking out to me right now is Clear Secure, unless I decide to maybe start a new position in the portfolio, which I'll talk a little bit more about later in the video. So guys, pretty much everything we looked at up until this point was just my main taxable brokerage account. And now, as far as my Roth IRA goes, this account is currently sitting at $16,469.50, which if we look at the returns, we can see the Roth is up about 1% here in the last month. A nice little gain for the Roth. I like to see that. And if we zoom out looking at the year-to-date performance, it is up just over 3%, not too shabby there. And then zooming out over the last year, the Roth is up almost 15%. So across the board, looking pretty good. And with that, if we take my main taxable brokerage account, which is valued at just over $79,000 and is bringing in $2,774 of annual dividend income, and add that to my $16,469 Roth IRA, and this account's generating about $430 of annual dividend income, this is going to bring my combined portfolio value to $95,601, and the annual dividend income sitting at $3,202, which is quite a big jump compared to this time last month. We entered the month of February with a projected annual income of $3,148, so we added just over $50 of projected annual income just in the last 30 days. And on a year-to-date basis, I would say we're making some great strides. We came into 2025 with the projected annual income of $3,064. So far this year, we've added $138 to that number. Now, guys, we are only 2 full months into the year, and I've got to say we are way ahead of the game when it comes to hitting my investment goals for this year. One of my big goals here in 2025 was to officially cross $100,000 in the portfolio, and we are less than $5,000 away from that. We're going to hit that in no time. If we have another month like these last 2, it's going to be game over. And then another one of my other goals is to reach $3,600 of projected annual income by the end of the year, which breaks down to an average of $300 every single month. And as we saw, we're less than $400 away from that, and I have no doubts we'll hit that before year's end. Now guys, as far as my watch list goes, I actually didn't make any changes to this list in the last month. The only interesting thing to report from the watch list is that Old Dominion Freight Line, ODFL, which is a stock I'm very interested in and have been for a while now, saw a pretty big drop. You can see that the share price went from about $210 per share, kind of middle towards the end of February there, February 18th. This is where it peaked, all the way down to where it's at now, $176.50. So it saw quite a big drop in the last month, and if we zoom out looking at the last year, this is going to leave Old Dominion down 17.6%. And this drop has got me thinking that Old Dominion could be a pretty good buying opportunity right now, which is what I'm telling you about in this next video right over here. In addition to Old Dominion, I'm telling you about 2 other rock solid dividend payers, all 3 of these companies look like great pickups right now in the month of March. So click right over here to learn about those, and I'll see you in the next one.